Hey, what's going on everyone? My name is Michael and welcome back to another video on the Growth Mindset channel. We don't know if the economy is sort of playing a bluff where it might be another 2008, 2009 market crash because we're at an all-time high and we're seeing a weird situation in the market where a lot of investors are kind of holding back on some of their potential gains, and then there's other investors that are just going all in and are making those extra returns that you wouldn't have seen a couple of years ago. And especially with the Chinese market and the US market going back and forth, and with how that is moving along, it makes it a little bit dicey for a newer investor that's really trying to get in and play their investments right to make a good and a high return. So in this video, I'm going to be going over how to take advantage of an economic crash in case that does come up. And I've brought it down to 5 different phases on what makes sense for me on how to take advantage of this opportunity in case there is another economic downturn, because eventually there will be a downturn. We just don't know how big it'll be or when that will actually occur. So I got my notes on the side here again. The first phase that I have is having, you should have self-awareness and observation of what your operating cost is on a monthly basis. And what I mean by this is that you know how much money you make and you know how much money is going out of your account. So if you haven't done so already, I would encourage you to make an Excel file of what those monthly costs continuously are across each month. Like, you know you're gonna have a housing payment, you know you might have a car payment, you know you might have student debt, you know how much it costs for you to eat every month and then have electricity, internet, etc. So I encourage you on that first phase of economic opportunities is to really hone down on figure out what your monthly debt is. And that's going to help you understand how much money you need to have available or try to save to invest in whatever market you're interested in doing. So that's the first phase. And second phase I have for you guys here on taking advantage for the next economic crash is debt reduction. So first phase, you knew how much money it would cost you every month to pay for your bills and your expenses. Second phase is debt reduction. So trying to figure out how can you reduce the cost of that monthly debt. If you're living in a really big house that you don't need, or you have extra spare rooms, perhaps try to find something a little bit smaller that's within your means so that you can reduce your monthly mortgage or your monthly rent. Let's say you have a car and you have car payments, and car payments aren't the greatest thing, I know, especially if you can't afford to pay cash for a car, but having a car payment on a new car is not really the smartest thing to do in terms of investment strategies, because it's going to depreciate over time at a really incredible rate. So that's not really a smart investment move. But if you have to have a car or you can't pay cash for the entire car, perhaps think about getting a used car or a cheaper car to again reduce that monthly expense. A couple other things that you might have that are perhaps you haven't thought about in a long time and you've just been paying for it and you don't really need it, or maybe it's just a little bit too much. I mean, fast internet can be something where maybe you have a gigabyte download speed, but really you just need 50 megabytes download. So finding ways to reduce your internet bill would be super helpful. Again, phone plan, if you have a phone with a lot of data that you aren't using, I have that extra monthly payment when you can reduce your cost down. You know, even 50 bucks off every month, 50 times 12, that's $600 more you have for yourself that can be used towards some other investment down the road. I'm in this too about eating out, and eating out costs a lot of money. You know, it's a very social thing where you're buying food that it costs way more to do than just making it at your house. So I try to balance that out where I cook my meals on the weekend and I meal prep throughout the week so that I can, at least if I'm going out, it's only on the weekend. And so I'll give myself maybe a $30 budget every week to go out and have some fun and socialize. And then on those work days, I'll just eat whatever I made on Sunday throughout the week and then kind of go from there. So that keeps my monthly expenses down in terms of food prices. You know that if I'm spending a lot of money going out every week, I'll try to spend that next weekend not going out, or maybe not going to the movie theater, or buying something that I don't really need. Sometimes your hobbies might be a little bit expensive. I'd like to go snowboarding. That can be a very luxurious hobby that does cost a lot of money, and it does add up. So potentially looking into hobbies that are a little bit cheaper, that will save you a lot of money. So for me, I like to play video games, and having even a custom desktop isn't too expensive if you think about it. You can build a desktop for pretty cheap, less than $1,000, and a game is relatively inexpensive per hour versus a more expensive sport that's seasonal, like snowboarding. Maybe you like skydiving a lot, but and try to enjoy the time that you are spending on those more expensive hobbies, because you don't always have the opportunity to do that. Like snowboarding is a seasonal thing, and so enjoy those times, but also be aware of how much money you're spending, and perhaps save up months in advance to budget and allocate just for that fun time, so that you're getting the best bang for your buck, and that you're having enough money to pay for at least your monthly expenses down the road. Along with debt reduction, try to find ways to pay off high interest rates that aren't useful for you. An example of this also is if you have a credit card, interest rates can be pretty high, 12%, 15%, even 20%, depending on your credit score. And so the way to reduce your debt for credit cards is just, if you have multiple credit cards, try to focus on paying one credit card down at a time, and you'll see that the number of credit cards you owe money on is reduced, and that'll be extremely motivational for you to pay one card at a time. Then now you have 2 cards paid off, then 3 cards paid off, and so forth. Instead of just paying for all credit cards at, let's say, 10% a month, do it where you just kind of focus on one at a time, and you'll see your progress a lot more, and you can really work towards getting that number down on how many credit cards that you have to pay off. So the third phase that I got for you guys is finding ways to increase your income, and also having multiple income streams along the way. So if you've been at a job for a few years, let's say you've been at a job for 4 years, there's a very likely chance that if you switch companies in the similar technical field that you're in, you'll find at least a 25% pay raise. And I think this is probably one of the easiest things for a lot of people to do, rather than learning a whole new skill set. Like, let's say you're a scientist and you're training to become a pilot. Like, that's a totally different field. So going to school to become a pilot, it's going to take a lot of hours, a lot of courses. But if you're let's say you're a pilot right now, and you switch airlines from, let's say, Southwest to American Airlines, and you've been there for a couple of years, you might get a pay raise along the way just for switching. And then you also have a change of pace because it's a different environment and you're working with different people, and you have your income increase. So that's one great way to boost your income, is just switching jobs, but remaining in that same technical field. It's also extremely risky if your debt to income is really high and you only have one income source. I know for a lot of people, this is true where you only have one source of income. And it's risky because if you lose your job, now you have no way of making money until you find another job. So I encourage you to develop more income streams along the way, perhaps picking up a second job that pays you, and you work, let's say you work less hours, but it's another way of making money just in case you lose your primary job. And it's gonna be really risky too if you have a high debt to income ratio, because that's just more expenses that are coming down on you monthly, and it's hard to save money up to go and take a risk on investing in something that you understand. Along with that, the third tip I have for you on phase 3 of increasing income and savings is just continue to build your savings account. Set aside money that you're willing to risk and lose at any moment for investments, but understand that learning along the way will teach you, and you'll only get better in that process. So just having that extra money, emergency money and investment money available is going to really put you ahead. The fourth phase is super critical, and hopefully in these videos that I'm sharing you guys on the Growth Mindset channel, that you're thinking about additional opportunities that you might not have learned in school about finances, education on investments. And fourth phase is all about taking advantage of learning about something technical in the investment world and becoming comfortable with that, so that when there is an economic crash, you can really go all in and take advantage of that opportunity. So get technical on something that you believe in or you're willing to take a lot of time and take risk in. It could be real estate, that could be cryptocurrency, that could be stock markets, that could be learning about Amazon FBA, that could be about drop shipping, it could be learning about how to start your own business, how to build a brand, doing anything in sales, just building up a skill set that you can really hone in and take advantage during the economic time. I focus on real estate, so I'm always learning about real estate and networking and talking to people about real estate. So when that time does come where there is a real estate economic downturn, I will be ready to make a move. So the fifth phase that I got is that when there is a crash of some sort, this really is your time to shine. You know, you've been saving money, you've been lowering your debt to income ratio, you've been learning about a new skill set. And now that you see an economic downturn, go get it. Go apply whatever skill set you've been learning about for those couple weeks or months. And you're going to learn as you go, because now you're really applying yourself, and you might not have done it before because you've been waiting for that golden opportunity. And understand that if you do make a mistake along the way, consider it like tuition. You might lose money, but you're learning along the way. And don't be afraid to ask questions. I know for me in the real estate market, I've gone out and asked other investors advice on what to do in situations that were surprises that I just didn't account for in my expenses. And you're only going to get better in this process, but as you build a system up and you write down the mistakes that you've made and you really ultimately just learn from that process, you will continuously get better and better. Again, as I've continuously said in many videos, I focus on real estate a lot to building passive income, because I believe that with a lot of investment properties, you can eventually quit your day job and solely just get really your time back from working a 9 to 5. So that's something that I focus on, and I'll share with you guys on live streams if you want to check it out, of me talking about real estate. And you can ask me any question, you know, shoot me a Zillow link, a MLS link, and kind of tell me your goals, and I can give you feedback on what I think be a good, smart move for real estate. And even just high-level topics on real estate in general, I would be glad to answer. So yeah, that kind of breaks it down to those 5 big phases on how to take advantage of an economic downturn. I hope you guys have learned a lot in this video, and I hope you enjoyed it as well. If you have any questions about economics, finances, how to save money, how to make more money, how to build multiple income streams, feel free to post a comment below, or you can email me privately and I can address it in a separate video. Or if you catch me on a live video where I'm maybe working on editing another YouTube video for you guys, go ahead, just introduce yourself. We'd love to hear from you, and just go ahead and ask the question in the comments and I will get back to you. Alright guys, thanks for watching the Growth Mindset channel. I had so much fun. My name is Michael, and I'll see you guys all on the next one.